Happy to be here. Yoki Finance is a web-free subscription payment gateway. Let's begin our journey into the future of the subscription economy crypto. But before I begin, quick facts about Yoki. We are not just a vision, we are already soft launched last month, and we have 4 live integration with our merchants, including currently the biggest one, Cointelegraph, the biggest crypto media in the world with 70 million monthly visitors, and we are their exclusive payment provider for their Markets Pro research product. We have partnership agreements with 2 payment gateways, including the biggest crypto payment gateway in the world in terms of the volume, CoinSpade. Their yearly volume is $3.7 billion a year. Just imagine how much it will be once we roll out the integration for all of their users. And we got the recognition from the crypto community. We won multiple hackathons. We received grants from Optimism and ICP. And also we are currently participating in the Gitcoin grant program. So please support us and go to vote. What the problem we are solving? Crypto has been created with a use case of payment. It was one of the primary cases, and it is still so. But the amount of usage in the crypto space of payment issues is much less advanced than in TradFi. So we are bringing one of the most popular cases on-chain, the subscription payments. There are already thousands companies and communities with subscription model in crypto. And how do they accept subscription payments? They are either sending the invoices to their customers and losing their retention, basically losing their customers on the recurrent payments, or they're using the TradFi, the time-proven subscription payment gateways like Stripe or PayPal, which are prone to censorship. They could block your account, they could freeze your funds, which is not the way that business should work, in our opinion. What is the market size? We are at the interconnection between the subscription economy, which is huge, and the web-free economy. The market is already there, and it's growing right behind our eyes. How do we build a solution for that problem? We get inspired by the best practices in the industry. Remember Uniswap. Their model is they disrupted the exchange industry by providing the permissionless liquidity pool where any token could be traded by anyone. And we are building the same model. We are building the protocol layer where anyone with just a Web3 wallet could create the subscription contracts and start accepting payments from their customers directly without any intermediaries. And as this is the best practice in Web3, it's permissionless, censorship-resistant, non-custodial, and composable. And it is composable. Third-party developers could build their own use cases on top of that, like loan repayments for real-world assets, donations, subscription payments for gaming, etc., etc., etc. The number of cases is uncountable. How it works? The process is very similar to the bank card payments with some specifics on-chain. So user proceeds to the checkout page at the merchant website, chooses the chain and the token. So we support Optimism, Arbitrum, and Polygon, and the stable coins like USDT and USDC. Provide the approval for a certain asset, confirm the transaction, and that's it. So after that, we automate the whole process. There is no need for any other interaction, and the access to the platform is automated because the merchant receives the webhook. You can open the demo by scanning the QR code and take a look yourself how it works. By the way, anyone notice that the numbers are wrong here? Okay. Traction. I've already touched that briefly. We launched the last month. We have integrated for merchants with pre-selected before that. But we have more than currently 30 merchants in the pipeline for the integration. We're not in a hurry with that. We're still finalizing the design of the product. And we have 3 strategic partnerships, 2 with the payment gateways and 1 with the top 10 Web3 wallet. I will tell more about that later. Our business model is very straightforward. We are charging fixed fee on top of the transaction, and as our customers are in subscription, we inherit their great retention rate. Competition exists, and there are some other bright minds that works on the same problem as we do. The difference is that we are operating as a protocol rather than a traditional Web2 company, and we succeeded in building the top-level product without any previous funding, where other companies build that with sufficient VC funding. So it's an early investment opportunity with a product that is already proven that we could build. On the roadmap, I would like to stop on three elements. First of all, it's the launch of our permissionless platform, where anyone is able to create their own subscription without gated access. So it's our product vision coming true. The next one is an integration into the already existing payment gateways, which is where we expect the volume spike for the product and onboarding of more merchants and users. And the third part is when we are integrated, when we launch the marketplace of subscriptions, and we allow users to pay for mobile phones, for major services like Spotify, Netflix, etc. And once it is integrated into the wallets, any user, by entering the wallet, will be able to subscribe to their favorite service or paying for mobile phone, and under the hood, it will be done by Yoki. I already partly touched our B2B part of the go-to-market strategy. Now I want to say more about loyalty points. It is our system of incentivization of the usage of the protocol. So we will be distributing the points for the activity on the platform to the merchants. So the bigger the volume, the higher retention, more points they get. And the merchants have an ability to distribute these points to their end users. And by that, we are creating the dynamic exchange value and incentivization loop. And this model is already proven by Blast. If you pay attention. We have 4 full-time team members and 4 part-time. I'm myself in C-level in the crypto space since 2018. I am a second-time founder. The previous startup I found, the technology of that was integrated into the regional leader in the search engine. My co-founder, Georgi, he previously founded the huge international development outsource company. So yeah, we are packed in terms of the tech side, and we are currently planning to onboard more on the business development side. We are raising 1 million pre-seed investment. The biggest part of that will go to the development, and also another big allocation goes to the token-related activity with listings, liquidity, market making, etc. Because token is essential for our incentivization quest. Yeah, I've already touched the part for the token regarding the use cases for the points, but also token will unlock exclusive promotional opportunity within our ecosystem and ecosystem of our partners. Thank you very much.
All right, amazing. Yep, judges, any questions?
Thanks a lot, Konstantin. What is the biggest hurdle you face when you try to onboard customers, especially when you try to pitch a product like this to crypto customers? I can imagine it might be attractive, but if you try to go to, let's say, Spotify or YouTube, the value proposition might be a lot different. So I'm just curious on your thoughts from your customer interview front.
So we are currently not onboarding the customers outside of crypto. We're onboarding crypto companies. The biggest problem is that people still don't know that this kind of service could exist. And I'm speaking about the end customers and as well. So there have to be some learning curve for them to understand that it is safe, that they could attach their wallet and pay for subscription with their wallet right as like they do with their bank card.
for example, for Cointelegraph, what would be the biggest hurdle to onboarding someone like them?
Some companies, they consider that the biggest problem they see is that their customers are not accustomed to that way of payment. So they prefer to pay with the bank cards or with crypto invoices, etc. So they do not have enough data. So what we do is we dig that data from current usage and from their communities to them about the interest in that kind of service.
Okay. And maybe just one follow-up question from the user perspective. If I were to pay using my MetaMask wallet, how is the process like? Am I just signing and approving one transaction and then it recurringly deducts from my same wallet address?
Yeah, that's correct. You are approving the transaction, and in current design, you have to confirm the first payment. And after that, the whole process is automated, and we cover the gas fees on behalf of the user.
And there's no likelihood for the merchant to deduct more than I allow it to?
No, the contracts are immutable, so there is already pre-written amount of that could be deducted. And the contract is assigned to the pricing.
So your biggest competitor would be Superfluid.
And it's not correct. Superfluid, they are building streaming payments, which is absolutely different model. And we are building more traditional recurrent payments. So I would say that our biggest competitor currently is Loop Crypto.
Okay, but then the streaming payment is really just recurring payment on very infinitesimally small period, right? So to me, that sounds like I could subscribe to a service for 2 days and I don't like it, I cancel. And that seems to be a better user experience. So in your mind, why would merchant or users find the traditional recurring payment, which is being enforced because bank transaction is expensive, to be better than the more crypto native streaming payment?
That's a great question. I believe that the adoption cycle comes from the merchants first, and merchants are not ready for the streaming payments yet. So a lot of industries, they're not interested in that kind of payments. For example, media paywalls. For example, like you pay paywall for to read an article on New York Times. They are not interested in providing you the streaming access where you can cancel that in 2 minutes after that.
So it's better for the merchant for the recurring payment, but it's better for the user for the streaming payment.
I cannot say that it's better in terms of the user. It depends on the case-by-case basis. But I love streaming payments as well. I think that's a great model.
Okay. No, thank you.
So I have seen there are plenty of doing the recurring one, but why you choose the permissionless one rather than the other competitor using the gated platform? Is it on easier, convenience?
Because I believe in ethos of crypto, and I would not like to build another company that will be first of all to block customer funds. So we do not want to hold the funds because it is an additional responsibility and an additional security threat for us. So the whole settlement is done between the counterparties without us. Between the merchant and their subscribers. That is one part. Another part is that we would not like to participate in censorship of our merchant because it's a slippery slope. When you start with some, you have to censor another. You have to act on the different jurisdictions with different rules. And if it is allowed for anyone, then it's like it is like this. It's an infrastructure.
All right, cool. Thank you guys. Thank you, Konstantin, for the wonderful pitch.
Thank you so
Let's give it
much.
up for Konstantin. Yeah.